Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Thursday, the 26th of February. I'm starting off with Gulf Keystone, which is perhaps the greatest bulletin board hero of the lot. Good news yesterday in terms of the possible sale news. Situation now on the charting front is that for those who are sort of upset that they may miss the rebound, the shares did actually bounce off the floor of a falling March trend channel from last year down to that was at 35 pence. There was a little bounce earlier this month, and then this extended support test, and then a rebound after yesterday's news. Difficult to get a handle on, but there was bullish divergence ahead of it. The only problem here is that you would have had to hold on to the stock for a number of days with it going against you before the rebound came at 35 pence. Situation now slightly fiddly. End of day close above the blue 50-day moving average. Yesterday was positive, although the shares have been higher in the day. What you don't want to see really is, say, an end of day close back below the 50-day line or below RSI 50. Best case scenario target up to the top of last year's channel, 80 pence, to sort of echo what we saw at the end of June last year. Maybe the worst case scenario would be that we just fizzle back below the 20-day moving average over the next few days at 44 pence. But at this stage, maybe a little bit more upside towards the 200-day line at 70 pence. But as you can see, the shares have had difficulty getting even anywhere near that feature in the recent past, even on a decent rally. So the situation not quite as good technically as one might have hoped for at this stage. A situation which is rather more flourishing on the bull side is that of Graphene Nanochem. Here we've had this sort of final bear trap below 30 to 35 pence, and below that September support there, just under 40 pence. The break of the 50-day moving average, very bullish, much more emphatic, for instance, as the one that we've seen at Gulf Keystone that I just mentioned. 50-day line at 38.8 pence. While we're above that, well, initial target, the 200-day moving average at 50 pence. Best case scenario, maybe 1 to 2 month target towards 75 pence at the top of this May rising trend channel. But it's really a sort of double bull bear trap effect in the sense that we've broken back after this deep probe at the start of the month and back above this old 2014 support. So that does look very encouraging indeed, especially if we can break back above the 200-day line before the end of the week. Another stock where there's good news is Sanlion Energy. I spoke to the company yesterday, and it all sounded rather encouraging. On the technical front, we have something which is even as encouraging in the sense that this is the spike that we saw yesterday completes an island reversal. That is a bullish formation. You gap down and then you gap up. So that looks encouraging. Support in the first instance towards the initial February resistance, which is at 1.6 pence. Ideally, the shares would not fill this gap down to 1.1 pence, 1.2 pence, which is the area of the 50-day moving average. Probably the best way forward here, if you're cautious, wait for any dips towards the 10-day moving average at 1.3 pence, and that's the end of day close stop loss. Initial target, a retest of the 200-day moving average at 2 pence. Best case scenario over the next 1 to 2 months would be to head back towards September, post-September resistance at 3 pence plus, and the top of this October price channel also in the 3 pence plus area. But obviously that we have had plenty of false dawns here, so the idea of enforcing an end of day close stop loss back below the 10-day moving average is one that looks to be wise. Finishing off with Xtract Resources, where it also looks as though we've got a similar recovery effect or recovery pattern, this saucer shape pattern to graphene that we talked about earlier. The good news here really is the price action above the 10-day moving average at 0.1 pence for Wednesday. That's sort of 2 days where we've been clearly above this feature. So this charting support should come at what was formerly resistance at 0.1 pence, only back below the 20-day moving average at 0.8 pence. 0.08 pence would really be outright bearish for the shares. In terms of the upside, initial target towards January resistance and the 200-day moving average at 0.17 pence, and August resistance the August resistance line projection through a quarter of a penny after that over the next 1 to 2 months. But the message here really is that this looks like at long last a decent recovery play. That's it from me. More updates at masterinvestor.co.uk.